Florida's condo market isn't just slowing down, it's crashing in a way that blindsided almost everyone. We're not talking about mild price drops of 5 or 10% here. In some of the state's most desirable cities, values have nosedived by 25%, 30%, and in extreme cases, even 32%. Families who bought in during the peak frenzy of 2021 are now deep underwater, watching their home equity evaporate, sometimes by hundreds of thousands, almost overnight. Retirees are being slammed with massive insurance premiums upwards of $10,000, blindsided by unexpected special assessments reaching $40,000, and stuck with condos that seem virtually unsellable. The number of listings is ballooning at an alarming rate, leaving thousands of units stagnating on the market. What was once the dream of palm trees and golden sunsets has rapidly turned into a financial disaster, like a hurricane, but for people's wealth. Number 10. Sarasota. Sarasota, once a shimmering gem on Florida's Gulf Coast, famed for its vibrant arts culture and the powdery white sands of Siesta Key, is beginning to show troubling signs beneath its picture-perfect surface. Just 2 years ago, condos here were selling for $600,000 without much resistance. Now, many of those same units are sitting on the market, struggling to move even at $420,000. That's a staggering 30% drop, enough to rattle both seasoned investors and retirees banking on stability. The floodgates have opened on inventory, with listings up more than 65% compared to last year. Sellers are undercutting each other in a frantic race to offload properties, causing prices to spiral downward. A typical two-bedroom condo that cost $480,000 in 2022 is now barely clinging to $350,000. And even at that price point, buyers are hesitating, waiting for the dust to settle. One of the major forces driving this decline? Out-of-control HOA fees and ballooning insurance costs. Many of the city's older high-rises now require extensive structural repairs, and condo owners are getting blindsided by massive special assessments, some ranging from $20,000 to $50,000 per unit. It's a financial burden most never saw coming. And then there's Florida's infamous insurance meltdown, making everything worse. For waterfront condos, annual premiums that used to hover around $3,000 have now tripled, shooting past $9,000. That spike alone sends monthly ownership costs soaring to over $1,200 before you even factor in a mortgage. For retirees living on tight, fixed incomes, it's a crushing blow. And for buyers already stretched thin, it's simply a deal breaker. Some had hoped rental income would soften the blow, but even that's falling short. A glut of short-term rental units combined with tighter local regulations has sent returns plummeting. Annual rental yields are now dipping below 3%, a far cry from the 7 to 8% returns investors once needed to justify the risk of getting in. Price reductions are becoming the norm, not the exception. More than 40% of all listings in Sarasota have slashed their asking prices. Downtown, gleaming luxury towers that once sold out during pre-construction buzz are now sitting half vacant, with developers chopping $100,000 or more off per unit just to stir up interest. What makes this all the more shocking is that Sarasota was once one of Florida's hottest housing markets during the pandemic frenzy. From 2019 to 2022, home values skyrocketed nearly 50%. But now, a significant chunk of that boom has already been erased, and some experts are quietly warning that this downturn might just be getting started. For condo owners who once saw Florida's sunshine as a safe haven for their wealth, it's no longer a tropical paradise. It's a financial storm they never saw coming. Number 9. Bradenton. Nestled between Sarasota and Tampa Bay, Bradenton used to be the low-key cousin, less glam, more charm. But lately, its condo market is looking more like a war zone than a retirement haven. At the peak in 2022, the median two-bedroom condo was nearing $400,000. Fast forward to today, and many of those same units are barely scraping $280,000. That's a brutal 30% drop that's left both sellers and buyers reeling. Inventory has exploded, up 70% from last year. With over 1,500 active condo listings in a city that typically has half that number on the market, sellers are in panic mode, slashing asking prices by $20,000 to $40,000 in a matter of weeks. It's a price-cutting spiral that just keeps feeding on itself, dragging values down even further. At the heart of the issue, a dangerous mix of too much supply and shrinking affordability. Bradenton was once a magnet for retirees and seasonal snowbirds. But now, that demand is drying up fast. Monthly costs have skyrocketed, making ownership far less appealing. HOA fees alone often range from $500 to $900 per month, and insurance premiums that once sat around $2,800 annually have ballooned to over $7,000 for waterfront units. All in, a modest condo can now cost nearly $2,200 per month to carry, even before you factor in a mortgage at today's 7% interest rates. For many would-be buyers, renting simply makes more sense. As a result, more and more condos are sitting untouched on the MLS, growing stale as the months roll by. And it's not just homeowners feeling the heat. Investors are stampeding for the exits, too. The short-term rental gold rush? It's over. Occupancy rates have plunged below 55%, and nightly rental prices are down more than 20% from their 2022 peak. What was once marketed as a steady, cash-flowing investment has now turned into a money pit, bleeding red month after month. Developers who bet big during the pandemic frenzy are suddenly stuck holding the bag, left with a pile of unsold units. Even worse, early buyers who locked into pre-construction deals are now walking away, choosing to forfeit their deposits rather than commit to overpriced properties they know are losing value. But Bradenton's condo collapse goes beyond just numbers. It's become a crisis of confidence. A market once seen as a rock-solid bet has quickly become a cautionary tale. The message? Paradise can turn sour faster than anyone expected. For longtime owners, the emotional toll is just as heavy as the financial one. Watching decades of hard-earned equity vanish in under 2 years feels nothing short of devastating. Number 8. Ocala. Famous as the horse capital of the world, Ocala was never top of mind when people talked about Florida's condo market. But behind the scenes, this quiet inland city is facing a surprisingly harsh downturn. Median condo prices that had climbed to $220,000 during the 2022 surge have since crashed down to around $160,000, a jaw-dropping 27% drop. For a smaller city like Ocala, that kind of hit is devastating, especially for retirees and first-time buyers who jumped in during the pandemic hype with barely any equity to cushion the fall. Inventory is climbing fast, up 62% year over year. More than 600 condos are now sitting on the market, gathering dust in a place where properties used to move quickly. The core issue? Supply and demand have completely fallen out of sync. Ocala had become a haven for budget-conscious buyers priced out of hotspots like Orlando and Tampa. But then interest rates spiked, and affordability crumbled. With today's 7% mortgage rates, even a modest $160,000 condo can cost more than $1,300 per month once HOA fees and insurance are factored in. That's simply out of reach for many locals. The median household income here is under $60,000 a year, making homeownership feel more like a dream slipping away than a goal within reach. To make matters worse, Ocala isn't immune to the broader crisis plaguing Florida condos. Aging buildings are being hit hard by rising maintenance costs, new reserve funding requirements, and insurance premiums that are climbing at an unsustainable pace. The financial strain is real, and it's only getting heavier. Insurance premiums that once averaged around $1,800 a year have now spiked to nearly $5,000. And for many residents, the financial hits just keep coming. Surprise special assessments ranging from $8,000 to $15,000 per unit are slamming homeowners who never saw them coming and never budgeted for them. Unfortunately, the rental market isn't offering a safety net either. Long-term rents have leveled off, averaging just $1,200 a month, barely enough to cover the soaring ownership costs. Investors who thought they were buying income-generating properties are now stuck footing the bill each month, watching their supposed assets bleed money. With out-of-state buyers growing wary and stepping back from the market, demand is drying up, and condo values are spiraling downward. For Ocala, a city once seen as a beacon of affordable Florida living, this downturn hits on a deeply personal level. Families who stretched their finances to the limit to buy in during the 2021 rush are now facing a brutal reality. Their condos are worth less than what they owe on them. The pain here may not make headlines like Miami or Tampa, but for the people living through it, it's every bit as heartbreaking. Number 7. Orlando. The city of Disney dreams is now facing a condo nightmare that no one expected. During the pandemic frenzy, median condo prices in Orlando surged to nearly $310,000 by 2022. But today, they've dropped to around $230,000, a harsh 25% correction that's left many owners stunned. Inventory has absolutely exploded, up a staggering 80% year over year. Nearly 3,500 condo units are now sitting on the market, and many of them are going stale. Sellers are scrambling to attract attention, slashing prices by anywhere from $15,000 to $50,000 just to get a single offer on the table. But the problem runs deeper than just higher interest rates. Orlando's condo market is buckling under the weight of sky-high HOA fees, often ranging from $600 to $1,000 a month, and insurance premiums that have doubled since 2021. That downtown two-bedroom unit that once cost $1,800 a month all in, it now demands over $2,600 when you include today's mortgage rates, fees, and insurance. And for local residents, many of whom earn a median household income of just $63,000, that kind of monthly payment simply doesn't add up anymore. Even the once thriving short-term rental scene, long fueled by Orlando's tourism machine, has started to crack, leaving investors without the safety net they were counting on. The flood of Airbnb listings has taken a major toll. Oversaturation has pushed occupancy rates down to just 50%. Meanwhile, average nightly rates have plunged 18% since 2022. For investors who were counting on a steady stream of tourist income, the math has flipped, and many are now racing to offload their properties. Around International Drive, some condos have dropped 30% from their peak values as panicked owners try to escape mounting monthly losses. Even the promise of job growth in Orlando's booming tech and healthcare sectors hasn't been enough to stop the bleeding. Buyer confidence is crumbling, especially with the wave of special assessments tied to Florida's new mandatory condo inspection laws. These surprise costs can range from $10,000 to $20,000 per unit, and they're scaring off even serious buyers. To make matters worse, lenders are now blacklisting entire buildings as too risky to finance. That's left cash buyers as the only ones still in the game, and they're negotiating hard, refusing to pay anything close to full price. But perhaps the most shocking part of Orlando's condo collapse is the speed. This was once one of the fastest-growing real estate markets in the country. Now it feels like it's in free fall. For owners who believe the Disney magic would keep their values climbing forever, reality has set in. Turns out, gravity hits harder than fairy dust. Number 6. Cape Coral. Once the shining star of Florida's pandemic housing boom, Cape Coral was the place where waterfront condos doubled in value in just a few short years. But now, that boom has flipped into a full-blown bust, and it's happening at breakneck speed. Median condo prices, which hit a high of $340,000 in late 2022, have since fallen to around $240,000, a devastating 30% collapse. In some canal-front developments, the drop has been even more severe. Units that were originally listed for $400,000 are now being slashed below $250,000 just to draw in any serious interest. Inventory has surged by an eye-popping 95% year over year. Over 2,000 condos now sit unsold in a city with a population of just 200,000. And the financial equation for ownership? It's completely upside down. Insurance premiums have gone through the roof. What used to cost $3,500 annually for a waterfront condo now exceeds $10,000. Add monthly HOA fees ranging from $600 to $900, and tack on surprise special assessments of $15,000 to $30,000 per unit for flood defenses and structural improvements. And it's no wonder retirees are being forced to walk away. Many simply can't afford to hang on. Even the cash buyers who once drove the frenzy have started pulling out, realizing that the carrying costs now outweigh any potential rental income. And investors who banked on high Airbnb returns? They're waking up to a brutal reality. Cape Coral's condo market is no longer a dream come true. It's quickly becoming a financial trap. Occupancy rates have cratered, now sitting below 45%, while average nightly rental rates have fallen by 20% since their 2022 peak. A condo that once pulled in $3,000 a month in bookings now struggles to clear $1,600. That's not even enough to cover half the monthly ownership costs. This collapse in investor interest has left many of Cape Coral's once buzzing condo towers eerily quiet, monuments to a speculative boom that turned into a painful bust. Adding to the drama is Cape Coral's growing vulnerability to extreme weather. After Hurricane Ian slammed the region in 2022, buyer confidence took a major hit. Concerns over flooding have only intensified, especially as new FEMA flood maps reclassified many areas into high-risk zones, forcing condo complexes into much more expensive insurance brackets. For owners who believed Cape Coral was their forever slice of paradise, the current reality is hard to swallow. Property values are slipping month after month, and any hopes of a quick rebound feel more like wishful thinking than a real possibility. Number 5. Jacksonville, Florida's largest city by land area, and once considered relatively safe thanks to its diverse economy and fast-growing population. Jacksonville now finds itself swept up in the condo collapse. The cracks are showing. In mid-2022, the median condo price topped out at $230,000. Today, that number has slipped to around $180,000, a 22% drop that few saw coming. Inventory has spiked by 60% year over year, with nearly 1,800 condos on the market. Many of them are just sitting as cautious buyers wait on the sidelines, holding out for steep discounts. The math for homeownership here simply doesn't work anymore. Jacksonville's median household income hovers around $67,000. But owning even a modest $180,000 condo has become financially out of reach for many. Between $400 monthly HOA fees and insurance premiums climbing past $4,000 annually, monthly ownership costs now exceed $1,700. That's a tough pill to swallow in a city where the average rent is still just $1,400. For those who bought in 2021, stretching their budgets to get in before prices rose even further, the reality now is bleak. They owe more than their condos are worth. What's even more troubling? The investor pullback. During the pandemic boom, Jacksonville attracted a wave of out-of-state buyers from places like New York and California, betting on rising values and rental demand. But now, that confidence has vanished, and many of those investors are looking for the exits. But with rental prices flattening and rising maintenance fees devouring profits, many investors are bailing out. Nearly 35% of all condo listings now show recent price reductions, some slashed by as much as $50,000. The downtown condo scene has taken a particularly hard hit. Developments that were once hyped as the cornerstone of Jacksonville's urban revival are now offering perks and concessions just to get tenants in the door. Along the St. Johns River, once coveted waterfront units have seen values drop by as much as 25%. Even newer condo complexes aren't immune. Lenders are increasingly hesitant to finance units in older buildings that fail to meet Florida's stricter inspection standards. That's left cash buyers as the last remaining option, and they're demanding deep discounts. What makes Jacksonville's crash especially jarring is how unexpected it feels. This was supposed to be the safe, Florida market, bolstered by job growth, population gains, and a stable economy. But for many condo owners, the illusion of security has vanished. What they hoped would be steadily appreciating assets are now slipping in value month after month, like sand falling through their fingers. Number 4. West Palm Beach. Once the sunny playground for snowbirds and retirees, West Palm Beach is now the backdrop for one of the harshest condo market reversals in all of Florida. Median condo prices that soared past $400,000 in 2022 have now tumbled to around $300,000, a steep 25% drop in under 2 years. The pain is even sharper at the top. In downtown's luxury high-rises, million-dollar units are now being marked down by $250,000, and still, many sit unsold. Inventory has surged nearly 80% year-over-year, with more than 2,500 active condo listings clogging the market. And the financial pressure? It's relentless. Since 2020, insurance premiums have tripled in many coastal towers, now surpassing $12,000 a year. HOA fees, which used to hover around $500 per month, are creeping dangerously close to $1,000 as buildings rush to meet Florida's newly imposed reserve funding requirements under the revised condo safety laws. On top of that, surprise special assessments, ranging from $20,000 to $40,000 per unit, for structural upgrades are pushing many retirees past the breaking point. Faced with mounting bills and shrinking property values, more and more owners are simply walking away, unable or unwilling to keep up. The rental market isn't riding in to save the day either. Investors who once believed that Palm Beach County's luxury reputation would guarantee strong Airbnb demand are now facing a much harsher truth. Occupancy rates have dropped below 50%, and average nightly rates have fallen by 15%. What used to bring in $4,000 a month in rental income now barely covers half the cost of owning the unit. And lenders? They're getting cold feet, pulling back on financing for buildings with deferred maintenance, which is choking off buyer demand even further. What's most shocking, though, is just how fast the mood has shifted. Only 2 years ago, West Palm Beach was being hyped as the next Miami, a magnet for young professionals, retirees, and remote workers alike. But today, open houses are quiet. Sellers are cutting prices week after week just to get a showing. For a city built on sunshine, prestige, and the promise of prosperity, the condo crash has cast a heavy shadow, proving that even Florida's most glamorous markets aren't safe from the gathering storm. Number 3. Tampa. Tampa's condo market, once a rising star in Florida's housing boom, is now spiraling downward in a way few could have imagined. Back in 2022, the median condo price topped out at $310,000. But by mid-2025, that number has slid all the way down to around $230,000. That's a crushing 25% drop. Along Bayshore Boulevard, where sleek waterfront high-rises once symbolized luxury living, the picture is even worse. Units that sold for $600,000 not long ago are now struggling to move for $400,000 or less. Inventory has exploded, rising 85% year-over-year. Nearly 4,000 condos are sitting unsold, marking the highest supply Tampa has seen since the days of the Great Recession. And the financial burden on owners? It's becoming overwhelming. HOA fees, which averaged $450 just 3 years ago, have now surged to $800 to $1,000 in many buildings, driven up by stricter reserve requirements and a wave of mandatory structural repairs. Insurance premiums have followed suit. For condos near the Bay, annual insurance costs that used to sit around $3,200 in 2020 now exceed $9,500. Altogether, these expenses push the monthly cost of owning even a modest 2-bedroom condo to well over $2,400, a painful figure in a city where the median household income is just $70,000. Investors, once bullish on Tampa's short-term rental potential, are now heading for the exits. Airbnb occupancy rates have fallen to 48%, and nightly rates are down 20% compared to their 2022 highs. What was once seen as a high-yield market has become a slow-motion crash. Properties that once promised $3,500 a month in rental income are now lucky to bring in $1,800. Owners are bleeding cash, stuck with properties that no longer come close to covering their costs. Nearly 40% of Tampa's condo listings have slashed their prices recently, some by as much as $75,000. And even Tampa's strong economy can't shield the condo market from the fallout. Job growth in sectors like tech, healthcare, and logistics is still holding steady. But buyers have become cautious, spooked by the hidden financial landmines. Surprise special assessments, ranging anywhere from $10,000 to $25,000 per unit, are keeping many would-be owners on the sidelines. Meanwhile, developers who once proudly marketed their luxury towers are now offering massive incentives. Anything to keep the lights on and the projects alive. But what's most unsettling for Tampa isn't just the drop in prices, it's the erosion of confidence. This was a city that felt unstoppable during the boom years. Now, the condo crash has delivered a harsh reality check. The party is over, and the hangover is just beginning. Number 2. Crest View. A small panhandle city better known for its military roots than high-rise condos. Crest View has unexpectedly become one of the epicenters of Florida's condo collapse. And the numbers here are nothing short of shocking. Back in 2022, the median condo price in Crest View was around $210,000. Today, it's barely holding at $145,000, a brutal 32% plunge in just 2 years. Inventory has doubled in the past 12 months alone, with over 500 units now on the market in a city that usually sees fewer than half that. Sellers are slashing prices on a near-weekly basis, with cuts averaging between $25,000 and $30,000 just to catch a buyer's attention. And even at these deeply discounted prices, affordability has collapsed. A $145,000 condo, paired with $350 in HOA fees, and $3,200 in annual insurance, now costs almost $1,500 per month to own. In a city where the median household income is just $62,000, that stretches household budgets to the breaking point. Many local buyers simply can't qualify, and the result is a growing stockpile of vacant, unsold units. On the investor side, things look even worse. During the pandemic boom, military contractors and out-of-state speculators poured into Crest View, betting big on rental demand. But those bets aren't paying off. Long-term rents now average just $1,150 a month, barely enough to break even. And with demand for short-term rentals nearly non-existent, investors are offloading units at a loss, desperate to cut their losses and get out. Nearly 45% of all condo listings in Crest View now show price reductions, one of the highest percentages in the entire state. But what makes Crest View's collapse so dramatic isn't just the size of the drop, it's how fast it happened. Back in 2021, this city was being hailed as one of Florida's best-kept secrets. Buyers fleeing high prices in bigger metros saw Crest View as an affordable escape with room to grow. But that dream has unraveled almost overnight. A toxic mix of rising ownership costs, flat local wages, and unchecked overbuilding has turned optimism into regret. And for many owners, the real nightmare isn't just the plunging values. It's the feeling of being trapped, stuck with condos that no one wants, no matter how low they price them. Number 1. Deltona. Tucked between Orlando and Daytona Beach, Deltona has become the unexpected epicenter of Florida's condo implosion. No city has seen a steeper decline. In the past year alone, Deltona has suffered the worst condo price drop in the entire state, a staggering 32.2% collapse year over year. Back in 2022, the median condo price peaked at $240,000. Today, that number has crashed down to around $160,000, wiping out years of equity in just 2 short years. Inventory has surged by 90%, with over 1,200 condo listings flooding a market that historically handled fewer than 600. And the cost of ownership? It's choking residents. HOA fees that once ran $300 a month have now doubled, or worse, reaching $600 to $800 as buildings scramble to meet Florida's new reserve funding and inspection mandates. Insurance premiums have tripled since 2020, climbing from $2,000 annually to over $6,500. When you combine those costs with today's mortgage rates, even a modest Deltona condo now runs over $2,000 a month to carry, completely unsustainable in a city where the median household income is just $58,000. Investors have all but abandoned Deltona. The short-term rental boom never took off, and long-term rents, averaging just $1,200, don't come close to covering monthly expenses. Nearly half of all condo listings in the city have been marked down, with many sellers slashing prices by $40,000 or more just to attract interest. Entire complexes are riddled with vacancies. Some desperate owners are offering cash incentives just to unload their units. But the most devastating part? The psychological shift. Deltona was sold as the pandemic-era gateway to affordable Florida living, a safe bet for middle-class families priced out of bigger cities like Orlando. But today, it stands as a painful reminder of how quickly affordability can collapse. Families who emptied their savings to buy in 2021 are now trapped, owing more on their mortgages than their condos are worth. For Deltona, this isn't just a financial correction. It's a complete breakdown of trust in the Florida condo dream. And the scariest part? It's all happening in real time, with no clear end in sight.